Hey folks, Tony from Kentucky. Welcome to my penny portfolio. Hope everyone's doing well. The stock markets wasn't that great today. This is just some updates and a little bit of market news. That's it. But like I said, I hope everybody's well. Let's jump into it. Let's see here. This is from our old buddy Mark Chaikin, Chaikin Analytics, Chaikin's Power Bar. This was earning surprises. Pinterest beat their earnings. Essex Property Trust beat their earnings. Amazon beat their earnings. Leidos, Leidos Holdings beat their earnings, and the Clorox Company beat their earnings. Top movers. Tickers LDOS, LLYTT, GLY, and ZBRA. They was the top movers. I think this was yesterday. And the losers was GEHC, TAP, WBD, MPC, and FFIV. That was the top losers from yesterday, and gainers. Sector Tractor, last 5 days. Communications, energy, financial, industrials, real estate, and healthcare, and information technology, all down. Staples, materials, utilities, and discretionary was up. So there was only 4 up and 6 down. 1, 2, 3, 4, 5, 6, 7 down and 4 up. Sorry. Market view. The Dow 30 down, S&P 500 down, NASDAQ down, small caps down, bonds down. And according to the Chaikin Power Bar, small cap stocks are somewhat more bearish than large cap stocks, and major indexes are mixed. I don't know. Now this is from today. Biggest gains and biggest losses. Looks like what is that? Biotechne, TECHNE, was the biggest gainer, over 16%, and Garmin over 13%. Armcorp, DuPont, Paramount Global, Verisk, Pfizer, and Johnson & Johnson were the biggest gainers today. Biggest losers. Now this is inside the S&P 500. Biggest loser was CVS Health, down almost 17%. Starbucks was close behind it, almost 16%. And Skyworks Solutions over 15%. Norwegian Cruise Line Holdings over 15%. Then Supermicro Computer was down over 14%. They didn't, well, we'll see in a minute about their earnings. But Estee Lauder Companies was down over 13%. CDW was down over 11%. And Global Payments was down over 11%. Oh, this right here is the Magnificent Seven stocks having a rocky April. Now, this is Meta, Apple, Amazon, Microsoft, Google, Tesla, NVIDIA, S&P 500, and the NASDAQ since December 29th, 2023 to April 26, 2024. And you can look at your graph. You see NVIDIA is way above them, by April 26th, and Tesla's down. But Meta, Amazon, Google, S&P 500, Microsoft, NASDAQ, and Apple was kind of tightly bound there, really, together. I mean, no, it's something. More tech news. Supermicro stock plummets 18% after posting revenue misses. But they was up on earnings per share, I think. And like really well. I think so. We'll see. And guess most Americans see TikTok as a Chinese influence tool, according to Reuters poll. What do you think? Meta is getting probed in Europe over disinformation. Chegg stock, I don't know if I've ever heard of that. They're free AI tools send online education companies spiraling. Tesla stock surges on watershed full self-driving approval in China. Now, this is from Yahoo, and AI investments are showing signs of a payoff, but the price is steep. Tech earnings season is in full swing, and while a handful of notable players still need to report, namely Apple and Nvidia, there's one key, throw line running through the announcements so far. It's taking a lot of money to make money on AI. Amazon, Google, Meta, Microsoft, four of tech's biggest AI players have each called out AI sales growth, though without many specifics, while pointing to increased spending on capital expenditures to meet AI demand. They're going to spend, and they already have, and they're going to spend mountains of money. Now, last week, Microsoft announced it spent $14 billion on capital expenditures tied to its AI build-out in the fiscal third quarter, up from $7.8 billion in the same period last year. The company's 2024 capital expenditures have already eclipsed its spending across all of 2023. And there's still another quarter left in this fiscal year. Google parent Alphabet said it spent $12 billion in the last quarter, and it will continue at that pace for the rest of the year. And Meta, also, Facebook is similar. They said it's cranking up spending, boosting its anticipated capital expenditures for the full year from $30 billion to $37 billion to $35 billion to $40 billion. And CFO Susan Lee, or is that Susan Lie, L-I, said that number will increase in the year ahead as well. Whoa. And on Tuesday, Amazon, it would blow past last year's $48.4 billion in capital expenditures, saying the $14 billion it spent in Q1 will be the low for the year. That's the low for the year. Those are mountains of cash. And while there are early signs that AI is driving revenue growth, it'll take time before it truly makes an impact on companies' bottom line. Now, the Yahoo chief analyst, Bob O'Donnell, thinks that it'll take 12 to 18 months, that time period, before they see any really big payoff. So, if you got stock in those companies, I wouldn't get discouraged. It might take a minute, but those companies, dude, they're going to do good in the end no matter what. I mean, let's knock on wood just in case. But spending won't slow down anytime soon. Like I said, it might take a year or more to start seeing AI-based revenue growth truly take off. I don't know. Okay. There's a huge growth. Nvidia set such a high bar for AI chips and AI in general a couple months ago that analysts expect all chip makers to do that, like AMD and stuff. Okay. Companies are going to ease up on spending, according to Forrester analyst Rowan Kern. Companies have been pouring money into AI technologies for years, but generative AI has just supercharged that spending. We saw a huge growth in investment over the past year and 18 months, but this has been a continuous increase over the past 10 years, according to Rowan Cowan. And he is some dude. He's an analyst for Forrester. Tech companies are preparing investors for the long road ahead. Last week, when Meta, Facebook CEO Mark Zuckerberg told investors that they was going to be spending a lot more money on AI, the next morning they was down 14%. I mean, Like that, dude. The markets don't like when companies have to spend a lot of money. Hood, meanwhile, said that Microsoft will continue to push AI spending with levels likely to be the same as those in company's fiscal 2025 as they've been throughout its fiscal 24. I don't know, man. That AI has gone wild. Uh, Osavsky, whatever, offered a similar outlook for Amazon, saying the company will plow money into generative AI services. Oh, man. I don't know. I don't know. Apple to report Q2 earnings Thursday after the bell, I reckon. It's the second quarter earnings after the bell on Thursday, yeah. And Wall Street isn't looking forward to the news because of the iPhone sales in China. That's the big thing. That other company over there, I don't even know how to pronounce it, Huawei, Huey or something, is recovering the market shares. But Apple should give investors their first look at sales of its Vision Pro AV VR headset. Shares of Apple are off roughly 1% over the past 12 months. Amazon stock pops after earnings beat, so that was great. AMD beats on Q1 revenue and EPS. The stock edges lower on light guidance. AMD reported better than expected earnings on Tuesday, but it didn't blow away Wall Street's sky-high expectations on AI chip sales. Like I said, NVIDIA has set the bar so high, it's hard for any other AI chip to even come close. But hey, man, what happened in the markets this week? Goldman Sachs ditches robo-advisor platform, WSJ. Goldman Sachs is closing its robo-advisor business and selling the accounts to Betterment. Tesla promised cheaper vehicle after all. I knew they'd do it. I told you Tesla would pull out of this. Musk is a smart dude. He'll pull out of it. Denmark launches largest wind farm tender to date. That's cool. Australia's inflation rate fell to 3.6, and it was previously 4.1, so that was good. U.S. durable good orders rose 2.6% over the last 12 months, which was higher than expected. Its readings was revised from 1.4% to 0.7%, so some of the increase may have been carried forward. U.S. GDP growth rate fell sharply from 3.4% to 1.6%. The slowdown was even lower than the 2.3% expected and reflects weakening household and government spending, as well as higher imports over exports. Check this out from our old buddies at CoinMarketCap. Killer whales sink or swim crypto pitches. This is the world's first crypto reality TV show. Who would have thunk it, right? Killer Whales is a reality TV show produced by Hello Labs and CoinMarketCap. Available to over 500 million people on Apple TV, Amazon Prime, Tubi, Google Play, and Hello TV. Within its high-stakes episodes, Web3 entrepreneurs pitch their crypto and NFT projects to a panel of industry experts dubbed the Killer Whales. Those fortunate enough to secure a perfect 5 out of 5 vote are rewarded with invaluable mentorship from the whales and a promotional package from CoinMarketCap, ensuring their projects receive the spotlight it deserves. What do you think? Think you may watch? From our old buddies, Danilton. Trade idea of the week. Decker's brand. That's ticker DECK, D-E-C-K. They got an AI score 10, a strong buy from Danilton's AI. 6 at low risk, 8 for sediment, 10 for technical, and a 9 for fundamental. So Decker's brand, and their stock price estimates, their low is 732, their average price is 955, and their high end is $1,179. Now, their alpha signals, I guess the best one was fundamentals, diluted EPS. Its current value is 27.81, and odds to beat market is 49.59%, almost 50% odds to beat the market. And their suggested trading parameters for a 3-month horizon is buy in at 833, set a stop loss at 751, which would make you almost a 10% loss right there, but then take profits at 1,090, which would make you up over 30%. So that's something, Here's Super Microcomputer. Third quarter 2024 earnings EPS exceeded analyst expectation while revenues lagged behind. Revenues missed analyst estimates by 1.2%. Earnings per share exceeded analyst estimates by 27%. But the stock went down. So it wasn't all bad. Here's our old buddy's Coca-Cola. Their revenues exceeded analyst expectations all across the board, I reckon. Revenues exceeded analyst estimates by 2.4%. Earnings per share also surpassed analyst estimates by 8.5%. Wow, ain't that something? All right, now, here's my old beautiful penny portfolio. It's down. Surprise, surprise. I'm down 1.70% today. It's because I think, ETH and crypto both is down. They've been down quite a bit today, especially Bitcoin's. Bitcoin's under 59,000 and Ethereum's under 3. And still 75% of my portfolio is in Bitcoin. But you see, I sold the MAGS ETF because I wanted to get into the Magnificent Seven individually. And I sold Reddit finally and Marvell Technologies, and I bought into Amazon, Nvidia, Tesla, Apple, Microsoft, Meta, Google, and that XME ETF, Mining and Minerals ETF I was talking about in the last video. XME, Google, Meta, and Microsoft and Amazon is up. Apple, Tesla, and Nvidia is down. And of course, Ethereum and Bitcoin is down. Wouldn't it be now? Here's my safe portfolio. Acorns. Can't see my big head. It's up to 55.62 now. I still got the $10 weekly recurring in the roundup song. I think last week it was $40, wasn't it? But yeah. Oh yeah, my alternative investments, public, are still down. Today I'm down 0.06%. My shares in Charizard are down 0.5% today, 0.50. And Shrek royalties are down. No, I'm down 0.5% overall, not just today on Charizard. And on Shrek royalties overall, I'm down over 10%. I don't know. I still think it's cool, alternative investments and stuff. Anyways, that's it, guys. That's all I wanted to give you the lowdown. Lord, oh my gosh, video's over 18 minutes. Sorry. But until next time, folks, take care of yourselves and each other.